Hello and welcome to another update video about Ethereum. We start here on the larger time frame for Ethereum, and yeah, the wave count is still very consistent with previous updates. We're still looking at a diagonal pattern to the upside from the 2022 low. Price action in recent months has been really boring. The price has not yet been able to form that fifth wave to the upside we wanted to see. As you can see, the price could not break above the all-time high. It also, not above the all-time high anyway, but also not above the March 2024 high, which marked the high of this cycle so far. And there is still room for further upside and room for further growth, especially as long as the 3rd of February low is holding, where the price bottomed locally in a strong sell-off at around $2,130. So that's still holding. We're trying to turn around here to the upside, but the structure from the low is not impulsive. Again, we're dealing with a larger diagonal pattern. We're not dealing with an impulse here from the 2022 low, which makes the entire structure challenging and 10 times more difficult to track, but also to trade. This year was quite straightforward. The rally between March 2020 and May 2021. This year is, well, way off. Yeah, okay, different. Not the right sentiment, or not the same sentiment, and it's definitely making it much more difficult for Ethereum to move to new all-time highs. As long as the last low is holding there, though, from the 3rd of February, we can look for higher prices, and even below that level, there is one more bullish case left I think I can make, which is for a larger wave 4. So at the moment, the idea is that the larger wave 4 bottomed in August. That's the wave 4 of this 5-wave cycle. Bottomed in August, around $2,098. Well, just a little lower than that, but it hit the 50% retracement at the time. The rally from there was only in 3 waves, however, so we didn't get a 5-wave move. The price dipped back into support, and we're waiting for the next impulsive rally. But we don't need to see an impulse. That's what makes it difficult, especially in diagonals, because the next move up would be a C wave, as you can see. And it could take the price to round about 5,700 plus. That, again, is just a moving target. At least we have something to watch for, like a landmark on the chart. It might move depending on how the microstructures to the upside develop. And we can be more and more precise the closer we get to this target range. But, you know, the C wave to the upside, which might have started on the 3rd of February, the C wave is either a diagonal or an impulse. And again, if that C wave is also a diagonal, it makes it even more difficult and ambiguous. So why are we always looking for impulses? Because it is the easiest structure to trade and track. And we had an impulse, for example, here you see how nice and clear it was from 2020 to mid-2021. And this structure here is just not the same angle. Instead, we have overlapping price action, 3-wave movements. It's just much more difficult to track. If you're interested to learn more about what is actually an impulse, check out my latest video on the MCO Global channel. It's our new main channel. I created a video about, what is an impulse, how does it work, and I showed you a live chart as well. So we apply it to, let's say, real charts. It's not only theory. So I uploaded that. This is our new main channel, which we launched last week. And there are not only tutorials, but also discussions around geopolitical events and so on. So check it out. I also talked about altcoin season and a really good Bitcoin buy indicator a few days ago. Link for that channel is in the video description. Now let's take a look at the smaller time frame. Here, unfortunately, there isn't really much action, so I think it's going to be a slow Saturday. We have seen an initial rally in what would be maybe a wave 1 of that larger C wave that I just shared with you, and then it could develop like this higher, but this is only an initial roadmap. This will likely change because, again, from the low on the 3rd of February, the move up is not impulsive. We don't have an impulse. And by the way, I really recommend everybody who's following these videos is checking out that video about impulses. It's going to be a tutorial series where I just, I created that tutorial and I want to create a series out of it to make sure that everybody who's watching these videos here actually understands the analysis, because I know a lot of people don't, and it takes a while to learn. And sometimes people write me, it takes them months to understand what I'm talking about, and that's fine. Elliott Wave is not easy to learn, but it might make it a little bit easier for you. Yeah, especially on a weekend like this. I mean, here I am, it's raining at the moment, it's boring. I mean, the market is boring. It's a perfect time to learn about Elliott Wave. It's just review your trades, check your trade journal, things like that. There's no reason to worry about the smallest microstructures on the charts. I mean, you see it here. We have a 3-wave move up that's not clearly impulsive. We have a pullback into support, okay, or reaction. But again, overlapping price action. That's not impulsive. The price even got rejected from the resistance area I shared with you yesterday. There is no sustained break, and we haven't even broken above the Thursday high. So really, we could still get that dip into the support area here, which might take the price to round about 2,400, maybe 2,270. As long as we're holding above $2,270, however, the overall focus could be on higher prices in the white scenario. However, there is a more direct path, which is the orange one, which also isn't very convincing. But if it's followed through, it should take the price round about to $3,100. It would probably also be a diagonal pattern that's unfolding here, and it will be invalidated with a break below 2,550, which is the swing low from Wednesday. But overall, whatever the microstructure is, it is important that the bulls turn up before the price breaks below 2,270, and we need a break above the green line at 2,930. That's really a signal that we're breaking out of the local range. Until then, there's a lot of chaotic up and down movement here, and it's not a great environment to be trading at the moment, at least not on the shorter time frame. So yeah, that's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.